World War III versus the Bitcoin Civil War. 2 wars, 2 debates, 2 interviews, 2 postmortems this week on Simon Dixon Hard Talk Live. The journalists are not here to report what is happening. They're here to report what somebody wants you to know. There is no such thing as the United States of America as a nation state. It is simply the military is a full rent militia for power.
The longer oil stays below 90, the more desperate Iran gets. Oil staying below $90 is actually quite risky for a much greater war. If you view the reemergence of shipping choke points as a thing, it has to lead to a much weaker dollar, much higher Bitcoin, much higher gold.
What is strategy? It is designed to sell securities and end up with as much Bitcoin as possible in Coinbase and Fidelity, the same place that the US government is putting their Bitcoin. If you own strategy shares instead of Bitcoin, then you are making Bitcoin weaker.
I think we're about to experience regime change where you just need to get along something.
I assume it's attack and coordinated by default. It's not innocent until proven guilty. This is guilty until proven innocent. I find it hard to believe that you get an attack on nodes, an attack on self-custody, an attack on hardware wallets, an attack on decentralized payment merchant processors, an attack on Lightning Network without us having a message. What is the message? Exiting the battle is not an option. Hey, Sovereign Wealth Builders, Simon Dixon here, and welcome to another episode of Simon Dixon Hard Talk Live. We are going to be covering 2 interviews that I did this week, both on BTC Sessions. One was a debate with Doomberg, an anonymous chicken on the internet. And I'm not saying that in a derogatory term, that's actually what he is. But he has good analysis and we had opposing opinions, and also a post-mortem on the Bitcoin Civil War. So we called this episode World War III versus Bitcoin Civil War, how wars are really won. And I think you can see in the Bitcoin Civil War what we can learn from the upcoming AI military and physical war. So we're going to dive deep into that. So part 1, the title was Everyone Sleepwalking Through the Biggest Event of Our Lives. And I do believe that this is the biggest event of our life, but we, myself and Doomberg, had 2 slightly opposing perspectives on BlackRock's power, on market efficiency, and also on whether we're in World War III or not. So we'll debate it out. In part 2, exiting the Bitcoin battle is not an option. So what's the postmortem and what do we learn? Let's jump straight in with part 1. So before we go to the interview, I got a few updates from you in terms of where we are in this transition to multipolarity. In the debate, we both agree that there is a transition. So what can we learn from what happened this week? So firstly, the announcement of Anthropic's IPO is going to be happening in October. If you're a long-term listener, you'll remember that we were talking about the war events were in line with the liquidity needs of the market. And so we've got to get through these liquidity needs, and the stress is in the oil market and the bond market. So what has Anthropic announced? October is going to be a $2 trillion IPO. For those of you that don't know the difference between a billion and a trillion in terms of conceptualizing it, if you were to take every year into a second, then you would have a billion is 32 years. If you take a trillion, it's 32,000 years. So it's the difference between 32 years and 32,000 years. In terms of before, history, that's before Jesus Christ and everything we know from there. So that's just to tell you how big these IPOs are getting. Now, this is the second IPO that's over $1 trillion. The first one was SpaceX. What did we learn from SpaceX? Well, the price corrected and now it's above the IPO price. So it's held so far. But many people are skeptical about these valuations. And historically, in these industrial revolution style build-outs, you have the first investors tend to be the ones that if they get the timing right, then they have a lot of returns. If they get the timing wrong, they could get wrecked and they could end up on the wrong side. So you have to be a trader to play those games. As an investor, I try not to play those games, trying to dollar cost average away. But what do we know about this? Now we're not doing just a $1.75 trillion IPO. We're now at a $2 trillion IPO. We are certainly in the territory of valuations not reflecting reality. However, we are transitioning to a world of AI and robotics. So everybody's got their own opinion there. If you play the markets, it's a very, very tricky one. And we've covered this many times on previous episodes. Right. So we've got the AI that's building significantly in China and the private technical industrial complex in the Western Hemisphere. We've got this massive data center build out that is driving stock market valuations. We've had different corrections. We also know that China has these structural abilities to demonstrate, like they did with DeepSeek, the efficiency of their open source models. And whenever they do that, we saw it had a big correction in NVIDIA's share price, but we have this structural bid through these passive ETF flows. And we have the question, which is the real question, of will the Fed print money? So if you ever have a massive correction in the AI build out, it could lead to a QE cycle. And therefore the Fed jumps in to save the bond market and prop up the stock market. That is the question that we're going to be looking at. So what evidence do we have in terms of what's happening this week? Well, speaking of multipolarity, this was a big move. Deutsche Bank, the largest bank in Germany, is now the first non-Chinese bank in the world that has actually got permissions in Europe to clear Chinese renminbi payments. And this is straight from Frankfurt, integrated into the Chinese system, the CIP system and renminbi. That's a really big change. So we got to keep watching what is happening with this European relationship in terms of its subsidiary to the American MIC, FIC, and TIC, and its distressed acquisition that's happening, accelerated by the war in Ukraine and Russia, and then NATO pumping those budgets so that you can bankrupt the companies, the countries, pick up the assets in distress, privatize them, financialize them, securitize them, and load up the local populations with their share of the national debt through this war expenditure. Now, in the meantime, remember what I said about a multipolar world. You've got a guarded financial system in China. And when Trump went to Frankfurt with the nodes and the executives of the FIC, the financial industrial complex, the MIC, the military industrial complex in terms of Boeing, obviously not all of them there, and the TIC, the technical industrial complex, they were all negotiating their position with China because they have such a structural dependency in different areas. We discussed this a bit more on the Doomberg debate as well. But now I was saying that you have multipolar financial systems set up around the world that then get to charge fees by being the go-between between the dollar as a regional currency, multipolar financial systems integrated into the world's manufacturing base and the Chinese CIP system, while they also simultaneously build ways of circumventing SWIFT through central bank digital currencies that plug into the global control grid, while America tokenizes, financializes, and securitizes its own dollar through stable coins and gradually rolls that out as an integration into the AI and robotics trade. So at the same time, what is the power behind the global control grid? Well, it's liquefied natural gas. It's LNG that's powering this vast amount of electricity. And with the AI bubble, it's not like rails where you build them once. You got to rebuild them every 2 to 3 years. So all of the sunk costs that we're putting in right now through these IPOs is going to need to be reinvested again as the hyperscalers and the semiconductor chips and the efficiency improvement is at this, rapid innovation phase. And this has always been something we saw in Bitcoin. Those that were able to acquire the latest chips and purchase the latest ASIC manufacturing were able to mine the most amount of Bitcoin. And that depended upon getting access to ASICs and chips via China and Taiwan. And so that same relationship we're seeing in the AI data centers is the same thing that we always saw in Bitcoin mining. Now, speaking about LNG, so obviously, as we move more and more into AI and robotics, LNG is becoming the new oil. The two are connected. It's not quite a separation like that. But we had this Strait of Hormuz event that led to all of the LNG contracts, force majeure contracts with Qatar, all of the new energy flows being renegotiated with Russia, with America, China that was loaded up, but also ended up having significant control over the oil prices because of its ginormous strategic reserves, while America is draining its strategic petroleum reserves. There was a lot this week around people talking about America draining its strategic petroleum reserves. But that's been happening since March. That's how the oil price was controlled in these bounded escalation that we've been covering all along. So why all of a sudden they're talking about it now? Because that's how the price was controlled. And that was started from March. That was like publicly known. But the media seems to be focusing it as if it's a new story right now. What is a new story is the increase in China's domestic LNG production. So it is accelerating. And there was some data to back that up as well. It's accelerating sharply. So industry data that was released, I have my suspicions about all data, wherever it comes from, but hey, we work from what we got. But they were estimating that China's domestic LNG plants produced 14.38 million tons in Q1 2026. That's up 14.3% year on year. So with new liquidation and capacity that's coming online, they are looking to be as independent as possible. That has impact on everything. So as part of the recent negotiations, when the trade war started, China stopped buying its its LNG from America. And then they recently reinstated it as part of settlement around the Strait of Hormuz. Now we're getting this bounded escalation where the prices are never going skyrocketing, but it's allowing for this massive wealth transfer and kind of global reset around these contracts. But if domestic LNG represents roughly 72% of China's consumption right now, and they're building out more and more of these ginormous AI and robotics data centers, this is a significant impact on the Gulf sovereign wealth funds, the Qatar sovereign wealth funds, America's LNG exports. Now it's an LNG exporter. But prior to this, it was 67% last year, and we're now at 72%. So these are real indications, obviously, that China's looking to ramp up its domestic LNG to power its half of the AI and robotics control grid that's being built. And obviously, this was a part of the Hormuz vulnerability, but that's not just new stuff coming online in reaction. If you've been a long-term listener, you said China was preparing for this way in advance, and the Iran war was simply the catalyst for the reset that's leading to new negotiations and new order as America slowly retreats to being a regional power rather than a global hegemon. So China accelerating its energy independence means that domestic gas and domestic LNG are also changing, the exporting countries that rely upon China making those purchases, which gives more leverage to China in setting this change in world order, which, as I've always said, Saudi, the Gulf countries, Iran, they have a dependency upon China to fuel their economic models. So that's changing the relationship between the petrodollar and petro-yuan and OPEC that was propping up the petrodollar, with the UAE coming out. And so Russia and Central Asian pipelines are accelerating in terms of the speed. There's still things to go. And of course, renewables. Most renewables are built and dependent upon the Chinese manufacturing base, which obviously is what Europe will double into right now. So BlackRock gets to push its renewable investment as well as its big oil, big gas and LNG investments in the Western Hemisphere. And Europe is dependent upon China for its renewables. It's dependent upon America for these LNG exports as a result of sanctions and clearly coordinated action. We debate that a little bit more in the Doomberg debate as well. Okay, So this is anyway, China's having a declining marginal dependence upon importing LNG, which is a huge thing. That matters for mainly Qatar is an important part of that, and all the other Gulf exports. The different types of LNG projects, that has a major impact as well, because we're seeing this as well. Right. This also, as I said, it really changes the US leverage. Now, understand the power dynamics in China. You have a MIC, FIC, and TIC underneath China. In America, the government is subordinate to the MIC, FIC, and TIC. And so those financial rails, the FIC, the financial industrial complex, they get less negotiation leverage the more energy independent China becomes, and the leverage over these maritime energy routes changes as well. So the Strait of Hormuz becomes less important, which gives more leverage to China in its negotiations based upon the Iran dependency and sanction relief that will come once the deal, the MOU, leads to, I believe, a deal. And so then what is it that we're seeing in terms of where is the stress? Well, all of this value is accumulating into the stock markets. The stock markets are decoupling from the real economy. Those that own stocks are getting further ahead. Those that don't own stocks are getting further behind if they're saving in cash. However, if they're purchasing bonds, they're now getting some higher rates. But the growth rate is accelerating, but it's accelerating and concentrating into fewer and fewer hands. You know, those that just own a small portfolio of stocks, they're not getting sufficient protection relative to if most of their income is going through some of this inflation. Now, the PPI numbers, the producer price index, we are seeing that it's not accelerating at the same rate. So there has been an improvement in the inflation numbers, and that could be attributed to AI productivity increases. And it could also be that the expectations of a deal being done in Iran, the market is reflecting that as well. So we'll keep watching that as well. But where is the stress? The stress is really in the bond market. So, you know, those short-term rates, the action of the Fed, which is what we'll be watching, the increasing likelihood of whether they decrease or increase, these are very uncertain questions. So where is that going? If the short-term rates, there's increased uncertainty, what's happening? Well, the long-term rates, the 10-year Treasury and the 30-year Treasury are showing significant stress. So there was a 30-year Treasury auction this week, and it cleared at 5.216%. So now we're at 216 basis points above the 5% stress level. This is now sustaining above 5%. And the auction is showing that America has to pay a higher and higher interest rate in order to get anybody to lend to it for 30 years. In fact, that's the highest rate in 25 years. 25 years, that is right after the dot-com boom and bust. And that's when my father lost all of his money in the stock market 25 years ago. Yeah, these are the rates just after the dot-com boom and bust. And that was based upon an internet bet. We're now at an AI bet. And that AI bet is at significantly higher leverage and significantly higher debt to GDP, but at ever higher growth rates. But, you know, it's the interest rate that is impact. So US posted in July, in its July budget, the largest deficit increase in history, the largest deficit in history. So in July, it was a $432 billion deficit. And that's due to an acceleration in the federal spending. And what is federal spending? Military, interest, and benefits, Medicare, Medicaid, socials, social security type things. So the interest on US debt at the moment is plus 26 billion from last July. So 26 billion higher in 1 month from last July. And these levels are basically an alarming $118 billion for the month. So total interest expenses for the 2026 so far is up to, we're now 1.17 trillion in 2026 so far, 1.17 trillion. To put that in context, interest expenses has now officially, by print, it was projected before, surpassed both the national defense and the Medicare spending. America is now spending and giving more to bondholders at higher and higher rates, and there's no real indication that there'll be lower rates at the Fed this year. So that means the interest cost only goes up. And now it's more than the national defense budget, the largest defense budget in the world. You've got two ways of going about that. The administration can try and increase the defense budget, which will then increase the interest on the debt, which will then is showing more stress in the bond market, which means more people are selling these bonds and the auctions are producing higher rates, which means that the interest cost is going up. And that's the doom loop that is currently being tested and to the highest degree right now. So the US government spends more money just on interest than it does to fund the entire US military and also provide healthcare for seniors in boomers retiring an aging population. So what do you do about those demographic issues? You know, you've got a aging population that is retiring at a highest rate. You've got expenses that are blowing out. You've got the debt charging, the bond auctions charging higher and higher interest in order to roll over the debt. Well, what are they doing? Asset strip everybody, pump all of that money into the stock market and try and get growth rates that outperform the average cost on the debt. So accelerating growth, but at the expense of the average person, which leads to the environment of deeper K-shaped economy, deeper civil dissatisfaction, and ginormous wealth concentration into fewer and fewer hands, which is why the big investment is in the control grid, the police and surveillance state, the AI and data centers. Now, that has two sides to it. You need to use that in order to become more productive, but you can see where this is going. Like, it's clear that's the strategy. And I don't think that changes under new leadership. So the US cannot afford higher interest rates. That creates a doom loop. And what are the rich and the wealthy doing? Well, they're asset stripping. They're saying, just keep it going, keep it pumping, keep it going, keep it pumping, keep it going, spend more, put it in pump the markets, and then I'll retire and maybe I'll pass on some of my wealth to the others, and they'll be figuring out what to do with the assets. The net result of this really is, if you look at the what Scott Bessent is doing right now all around the world, is it is servicing the military industrial complex, financial industrial complex, and technical industrial complex needs, dumping as much debt on the American people, but going round and trying to stop people selling their bonds. And so we had the intervention in the Bank of Japan carry trade. We covered that deeply last week. Not going to go deeper into that again, but that's showing more and more stress. And in part two, we'll cover a little bit around what's happening with Tether as well. Because now Tether, you know, as the 18th largest lender to the US government, and this new stablecoin policies that are part of the programmable money control grid, they're coming into being potentially too big to fail. So look, that's all the updates I wanted to give you in terms of where we're at this time. In part one, we're we're essentially asking in the debates that I said that I'm going to be doing, that we're going to play shortly with Doomberg, is whether we're already in World War III. What is BlackRock's role in that? And are markets sufficiently telling us the story? I debated all of those issues with Doomberg. Got a lot of respect for his opinion. We agreed on some, we agreed on other things, but I like to stress test my theories, and also he likes to stress test his theories. So I hope you enjoy the debate. But in part two, we're going to be returning to Bitcoin civil war. And I want to compare and do a post-mortem analysis on what happened, what comes next, what you need to know if you own some Bitcoin, if you hold it on an exchange, or if you hold it in self-custody. There's going to be a big difference in terms of the action. But also, does what happened in the Bitcoin civil war have an impact on the technology and AI for physical wars that we'll be doing? That's going to be a question that we're going to explore into the future. But both of the wars look completely different. The way it was in the Bitcoin civil war versus what we're experiencing in the physicality of whether we're in World War III or a managed transition, but both teach us something about power. And I think there's something to learn from both of them. Who really makes the decisions? I've talked about my theories, and Doomberg talks about his theories in terms of the global macroeconomy. But what about at the Bitcoin level? Is that going down a same trajectory? Who thinks they're in control? In the case of America, the government thinks it may, people may perceive that America is in control, but it's subordinate to its MIC and TIC, the exact polar opposite within China. And so I think we can learn from these. So we will learn them. And I thought we'd do them side by side. Azad wanted to play both of the interviews. I've been doing a lot more interviews. Also, to give you a little bit of an update on the book. So the Game of Money, I told you last week, I'm now on chapter 21. So this is the final chapter. Then I move into a form of editing phase. I'm looking at how we can do this open source. I really like the way Andreas Antonopoulos did it with Mastering Bitcoin. But we're looking at what we can do to make this the most useful, and also thinking about how it could be integrated with some kind of open source AI commands, so that you can use what you learn in the Game of Money to take yourself from subordinate to sovereign, because that's the idea. Another thing came out of that I'd like to update you on as we create this book. So next we'll move to the edit phase. That might take another month or so. I'm trying to get that done as soon as possible, but the first draft, should be finished by the end of this week. I'll do the finishing touches this weekend. But when I wrote chapter 19, which is on the sovereign assets, one of those sovereign assets is Bitcoin. And when I covered the Bitcoin part, I realized it's a whole book in itself. So I've moved right into drafting the next book, which takes all the methodology that we learned in the Game of Money and applies it to the entire history of Bitcoin. And I want to share many of the inside stories that I can only really share today, and what to expect next in terms of the future of Bitcoin. So let me know in the comments section what you would like in a dedicated book applying the Game of Money methodology to Bitcoin. So there's a couple of ways you can do that. Firstly, you could put them in the comments section below. But what I prefer you to do is go over to simondixon.com, get yourself a completely free login to the to the Simon Dixon Hard Talk membership portal. And there's a section in there where you can give your feedback. And you can let me know what you would like to see in either the Game of Money or the following Bitcoin book that's coming out of it. And then what we're going to be doing is that my team will be going through all of that, feeding that back to me as we go through. And that's really helping in this open source community book writing process. I have found that even though I cover this every single week, I need to get the methodology down so that everything we cover each week makes a lot more sense to you. And I haven't found a better medium than books. Obviously, we'll do audio books and we'll do lots of video to make it easier to consume. But I'm finding this process, I think you're going to really enjoy what comes out of this. And we're going to be doing a little bit of an AI integration, because what's the point in the methodology if you can't apply it to your own life? Okay, so that's a little bit of an update. Now we're going to head over to the interview. It was myself and Doomberg, the anonymous chicken, that we were debating several things, and it was on BTC Sessions, hosted by Nathan. Shout out to the guys over in BTC Sessions. And the key things that we were answering the questions and sharing our perspective is, are we in World War III, or is this not World War III? Also, there was pushback on my thesis around how much power BlackRock, State Street, and Vanguard has. So we debated that out a bit. A little bit of a debate in terms of the difference between gold and Bitcoin as a methodology for achieving sovereignty, and also whether markets are efficient. So we cover all of that in the interview. So always remember, you are alive at one of the most interesting and exciting times in financial history. I'm going to come back with a little bit of a synopsis after this interview to give you an update on the Bitcoin civil war, and then we'll head over to the part 2 interview after that. In this change, some are going to get wrecked, others are going to do really well. I want to make sure you're on the right side of this change. So make sure you like this video, share this video, subscribe to me on YouTube, follow me on Rumble as the backup. Make sure you join my podcast on Apple and Spotify so that you can download and listen to it. And also follow me on X at Simon Dixon Twit and get that login for yourself on simondixon.com. No advertising, no monetization, no adverts, no sponsors, no business upsell model. Just trying to help as many people get through this transition and get you from subordinate to sovereign. So enjoy the interview and I'll see you on the other side for part 2. Peace. The journalists are not here to report what is happening. They're here to report what somebody wants you to know. There is no such thing as the United States of America as a nation state. It is simply the military as a full rent militia for power.
The longer oil stays below 90, the more desperate Iran gets. Oil staying below $90 is actually quite risky for a much greater war. If you view the reemergence of shipping choke points as a thing, it has to lead to a much weaker dollar, much higher Bitcoin, much higher gold.
What is strategy? It is designed to sell securities and end up with as much Bitcoin as possible in Coinbase and Fidelity, the same place that the US government is putting their Bitcoin. If you own strategy shares instead of Bitcoin, then you are making Bitcoin weaker.
I think we're about to experience regime change where you just need to get long something.
Quickly, guys, if you want to help the show continue at no cost to you, for today, just hit the like button. All right, so we've got Simon Dixon and Doomberg together for a geopolitical and macro analysis of this global transition that you won't find anywhere else. In this conversation, we go into the Middle East forever wars and the US's transition to a regional power. We cover energy markets and what the recent price action is signaling. We go into Bitcoin's centralization and the ongoing simultaneous attacks. We also cover media propaganda and so much more. And this is actually only part 1. In part 2, Simon and I go deeper into the cold card and ongoing Bitcoin infrastructure hacks, as well as the recent BIP 110 failed fork that happened just this last weekend and what it means. So make sure you're subscribed so you don't miss out on part 2. All right. Good morning, gentlemen. Thank you so much for joining me today. Very excited to have this conversation. Very excited actually to get you two together. And there is a huge ungodly amount for us to unpack. There's the war still grinding on in the Middle East and Ukraine, the energy markets, the yen intervention, Bitcoin, AI. It seems like everywhere I look, there are world-changing events happening. So to kick off the conversation, Doomberg, I want to start with you. You always have these amazing lateral thinking hypotheses that really stop me in my tracks. So with that, what ideas have been rattling around in your head lately that maybe nobody else has caught on to yet?
Yeah, it's a great question to start the week, I suppose. Fresh out of the gates here on a Monday morning. But I would say, we're pondering a bunch of stuff that seem to be converging. So there's the outcome of the war in Iran. There's the outcome of the war in Ukraine and just the remarkable thicket of totally fabricated propaganda that we see in the Western press, which is an interesting indicator of, we think, challenging times ahead for the NATO alliance. And then this breakdown in the sort of international law of the sea, the freedom of navigation, the reemergence of choke points in geopolitics, and then news this morning, of course, front page of the Financial Times of China inaugurating the famous Northern Sea route, going through the Arctic, which is a geopolitical win for Russia, assuming it gains momentum. Lots to talk about. How they all converge is what we're trying to put together internally. We keep coming back to, and of course, Scott Bessent's infamous yen intervention, buy 5 to 10 billion yen with the handy currency ticker and brackets, just in case the guy who used to trade for Soros forgot what the yen symbol was. Staged for a Reuters photograph for everyone to see. Not sure which direction you want to take it. I can tell you where our lead hypothesis now, which is if you view the reemergence of shipping choke points as a thing, I mean, they always existed, but for many decades, they were sort of an afterthought in history classes. Really, it's an unwind of globalism by definition. The biggest beneficiary of globalism has been China, and the biggest loser of globalism has been U.S. manufacturing. Trump ran on a campaign of reinvigorating U.S. manufacturing. That's an impossible task with possession of the global reserve currency. The U.S. dollar is way too strong for that. And so if you view sort of at a meta level the reemergence of global shipping choke points as an axiom for analysis going forward, it has to lead to a much weaker dollar, much higher Bitcoin in dollar terms, much higher gold in dollar terms. And when you mix in the yen intervention, sort of end of times for the Western financial system, the great monetization event that must eventually happen, one wonders whether we aren't at the beginning stages of a pretty significant historical pivot point that will become much clearer to the great majority of scholars in 10, 15, or 20 years. That, not to start too heavy, but that's what I was pondering on my morning walk as I was trying to get my steps in for the day.
Simon, I want to get your response to that. Before that, though, quickly, Doomberg, I want to double tap on, you said increase in propaganda in the West. Is there something specific that you're seeing?
Look, I mean, you go online to Twitter and read various independent media blogs, and all you see is video footage of Ukrainian men being snatched off the street, violent fights with their families. This is sort of forced mobilization. There's a critical shortage of manpower in Ukraine. They're talking about deporting military-aged men from Europe, basically to send them straight to the front line. That's all you see. And then the front page of the Financial Times this morning is a story about how all of that's going on, but just in Russia. Which is, of course, I mean, I would put the odds of that report being factually correct at less than 1%. Kind of like the old CIA axiom, like always make counter accusations, right? Like projection by accusation. And so when you see a story like that, look, the Financial Times is a great newspaper. I subscribe to it. I read it every day. It's one of the first things I read. It has great reporters. They break amazing stories. And every once in a while, there's an article that's just absolute, total horse, you know what.
Yep.
And I often wonder about the genesis of such articles. Like, who are the reporters? Like, how does this get to the front page? Like, it's just such malarkey. And so counter to like what even a cursory inspection of primary source intel can give you. There was all manner of Ukrainian blogs, pro-Ukrainian Twitter accounts who have been cataloging the violent nature of the forced, conscription of young Ukrainian men. There's reasons why millions of them fled to Europe in the first place, and yet here we have in the Financial Times, if you're by the way, the British propaganda is the worst. And so if you're in Britain and that's what you read and you think that's true, well, you think the war's being won. And man, it's just really amazing. I find it like it when you read the news as a content creator and your job is, and as I mentioned before we hit recording, we're working on a book and the first chapter is called Why Most Analysis Fails. And it's all about procuring and grading and assessing inbound information correctly. Like that's a very fascinating data point. I'm genuinely extremely interested in how that happens. Like, it's the literal reverse of what any neutral observer inspecting the metadata would conclude. And yet it's just right there. It's truly amazing. It's probably a whole podcast in itself. It is, in fact, the last chapter of the book, which we haven't written yet, Propaganda in the Age of AI. But anyway, that's sort of what I meant by that reference, because I literally just finished reading the morning papers before jumping on with you.
Very interesting, Simon. I'm curious your thoughts.
Okay, there's a whole podcast of content that we could go down. So let's do the media one. Let me respond to some of those, and then we can see where we want to go. The media one, I've always used the methodology of following the money. And there's several threads you can follow. Is it a public company? If it's a public company, then it needs financing. If it needs financing, then ultimately it serves its shareholders. And there is a hierarchy of signing off information when the information is sensitive. And so the journalists are not here to report what is happening. They're here to report what somebody wants you to know. And sometimes that could be true. Other times it's propaganda. Other times they just are subjects they can't touch because it hits a corporate sponsor. Other times it's covert CIA, MI6, Mossad mechanism via some kind of NGO think tank network, where ultimately the corporate wrote the policy. The policy then goes through a network of financing, and then suddenly an anonymous source contacts a journalist or a relationship. And by that point, you've got either a captured journalist or a journalist that is protecting their sources, or a hierarchy by which they can't report. So the reason I think the Financial Times is a good media outlet is not because I believe in their reporting. It's because it's predominantly a mouthpiece for what I call the financial industrial complex, the FIC. And so when the FIC want you to know something, some faction of power, whether it's private equity, whether it's at the asset management layer, whether it's the investment banks, um, they are trying to indicate where capital is about to flow. Now, you could be on the wrong side of that trade or the right side of that trade. And so for me, I don't see media as a mechanism for receiving information. I see it as a median for analyzing what some faction of power needs me to know. And then I kind of go backwards from there. And so the media is just, 100% captured at this stage. And then that kind of translates down to social media where, we went through a model where we were in extreme censorship. So if you wanted to speak against Israel, there was a time when that would lead to your cancellation. But we've transitioned to, since Elon Musk took over, more like I think he framed it, freedom of reach, but not freedom of speech. And so the way that I interpret that is that now they want you to talk and they want you to give your real radical version of yourself in your extremist thoughts. And it's making your social credit score, it's making you're feeding the data in. And then they're gradually social engineering you, where if you report a more extreme version of what you said, you might get more boosting. If it's aligned with a particular agenda, you might get more boosting. And so what they're doing is they're gradually training people through freedom of speech, but not freedom of reach, in order to get the maximum reach by servicing the agenda that the algorithm needs you to serve. And that's determined by sponsorship, advertising, and various propaganda outlets. And so we're getting this time when we're getting, social media is really engineering some of the most extreme ideologies and then servicing you and feeding you up videos and shorts that make you into the most extreme version of yourself with extreme bias, that really makes you feel like, that whatever they need you to feel, whether there's an invasion, and the Ukraine example is like the perfect example. Look, the Ukraine war is pretty simple when you bring it down to its essence. And I connect it to the Middle East. There has been a century of forever wars in the Middle East, which is extremely profitable. A massive chunk of the American debt is because of the forever war in the Middle East. I mean, maybe let's put $15 trillion of revenue there. The goal of Afghanistan was not to win a war. It was to spend money for 20 years. And in the end, you took a version of the Taliban that was resisting against drug trafficking and replaced it with a version of the Taliban that was allowing drug trafficking for the CIA, Black Op and Mossad operations and MI6 ops. So they did a regime change to support their drug trafficking cartels in the West. And they spent, $2 trillion to replace regime change the Taliban. So the goal of the war is not anything that the media is telling you. The goal of the war is a portfolio to prop up the stock market. And so if you look at then bring that back down to Russia, Ukraine, there is probably another $1 trillion that military stocks can make from the Russia-Ukraine war. There's significant collateral that BlackRock can get in order to gain access to certain minerals, and resources and trade routes. And Russia's going to end up with a chunk of the land. Now, we know that in the end, the private sector in America, UK, the private companies, they're cashing in on the war. Whether it's BAE Systems, whether it's Lockheed Martin, whether it's Raytheon, General Dynamic,
through to Israel and Albeit Systems. They're about to do a public offering. So a lot of the state assets in Israel are being privatized and going public now. But the stock market is loving the war. And so, and we're getting this decoupling of the economy from stocks. And then eventually you move into leverage negotiations, and then you get rebuild, and rebuild is extremely profitable as well. But if the forever war in the Middle East is coming to an end, which I believe it is, and then you need to then determine what's happening at all the trade routes, how much oil is going to come, what happens with OPEC, what happens with the petrodollar, the Japan carry trade, the euro dollars, what happens with all those things. That's a radical change. Protection of port. It's a radical change of empire, the biggest change we'll ever see in our lifetime we're experiencing. Then the military need to make up for lost profits. So if they can have another 3 years of war in a bounded escalation environment, then Russia gets what they want, BlackRock gets what they want, the military companies get what they want, the banks get to finance, the governments end up in debt, and then you can just, it's a free for all and grab for all of all the resources. And so both the military industrial complex and Russia are not incentivized to end this war. Russia gets more land, the military get more profits, the banks get more financing, and then in the end, they get the resources. So they'll push out a narrative to make you believe that you're defending democracy. It's why in the UK, you look at people thinking, well, we've got homelessness, drug addiction, wealth inequality, we've got immigration challenges, we've got jobs going, but somehow we need to still wave a flag of Ukraine, put something blue and yellow in our bio, and figure out why we've got $3 billion to send over to Lockheed Martin, General Dynamic, Raytheon, so that Zelensky can launder some money. We can bounded escalate so that the economies get screwed, the private equity come in and purchase all the assets, and the stock market reaches new highs while you socialize the cost through the national debt on the people. And that's the deception. The media is there to deceive you into thinking that you're doing something for a reason that you think is morally grounded, when really you're actually servicing power. And the media is there to, is controlled captures. It's either public or paid or sponsored or the victim of covert operations.
Doomberg?
Well,
that's a lot.
Yeah. Only thing I would add is that a mirror of everything you just described exists within Russia as well. And in fact, the second chapter of our book is on lateral thinking and mental models, and we walk through an example of a crazy hypothesis that because the lateral thinker is comfortable brainstorming around axioms that are provably untrue, just for fun and interest and effect. And so we played around in the book with a mental model. We'll see if it survives edit, by the way. That Putin is a puppet of Western intelligence. And what would that look like? And just play around with it. And we don't really believe that, but it's plausible. But then we end up on a much more plausible one, which is a grinding war of attrition benefits both sides, especially if it's being fought outside of pre-2014 Russia and outside of the NATO territories. Because the military-industrial complex of Russia is printing cash too, right? And Putin has many powerful people that he's trying to balance internally. And so, I do think there's a lot that the part of the reason why I started with that Financial Times article is because you can't just produce articles like that. You have to have like 85-95% of your stuff is who, what, when, where, why, straight reporting, give that veneer of authenticity. But partitioning that again, so like literally the subject of the book is maybe it's an impossible task. If I believe what Simon is saying, is how does a person navigate the new information deluge in a way that preserves their individual freedom of thought? So when I first read 1984, as a child, wish I hadn't, probably explains many poor life choices.
I was going to say, how young?
Oh, boy, I don't know. You tend not to remember the traumatic experiences of youth. Yeah. But I committed to myself that I would always be a free-thinking person, right? And it's becoming really challenging to do. I think a lot of what Simon says resonates. I think history teaches that you really can't be too cynical in real time. And the last decade has proven, if anything, that many conspiracy theories, quote unquote, evolve to conspiracy fact, and then they become old news. And I point to the comings and goings of Dr. Fauci as sort of just one of many examples. As a general rule, that which you're not allowed to say. We have a mental model internally. If you could lose your Instagram account over it, it's probably true. Eventually, no need to go and like be a martyr, in the middle of it. But as a rule of thumb, if YouTube is demonetizing it, it's a pretty good indicator that there might be some truth to what's being censored. So I agree with much of what Simon said. Obviously, I'd nibble at the edges of a few broad points. But yeah, there's no question that war is always a racket. We, as a team, and in our writing and in our podcast appearances, have been consistently and firmly anti-war, which occasionally really annoys some people. But alas, such is life. That's our view. We think, for example, this war in Iran is an utter and total catastrophe, except for, I suppose, if you're making Patriot missiles and now the world believes that you're super duper short supply of those and will pay anything to get more of them. But there's an awful lot of suffering and dead people that are on the other end of this. And it's truly sort of boorish at some point when you think about it. It's not all that complementary to the state of humanity and the willingness and gullibleness of society to fall for the old weapons of mass destruction trick again. Like, how many times do we need to see Colin Powell holding up a vial of yellow powder at the United Nations before we begin to wonder maybe whether things aren't quite as they're being articulated? Last thing I'll say is if you really want to freak yourself out, just get on YouTube and go look for, because it's out there, World War II propaganda in the United States. And all these people have archived like what was being said about Japan and about Germany. And I would say, if your discretion advised, it's pretty shocking stuff. Let's just say it doesn't age well. It's almost unbelievable what was routinely shown to American audiences. I'm sure it's the same, if not worse, in Europe. And this stuff is archived. You can go see it. So yeah, lots to say, many directions to pull. Not sure how we're going to wind our way all the way back to Bitcoin, but here we are.
We'll find our way back there at some point. But I actually, Doomberg, I kind of want to unpack that a little bit more. Simon had mentioned the idea of this one being the biggest change of empire probably of our lifetime, and also the idea that the forever wars in the Middle East might be coming to an end. I know, Simon, you've spoken a ton about the idea of shifting to a multipolar world. And then similarly, Doomberg, I believe you framed it more as like America's becoming a regional power, which to me feels like similar or aligned kind of ideas. I'm just curious your thoughts on whether or not that's something that we're witnessing right now, or what's happening.
Much depends on the appetite for China, the appetite by China for all of this type of nonsense, because China is the global superpower today. I think anybody who thinks that, anybody who watches Fox News, I suppose, would assume that America is still the undefeated heavyweight champion of geopolitics. But anybody who's been to China, that looks at the numbers, that does any basic analysis beyond nominal GDP as measured in US dollars, can see the writing on the wall. China has long ago surpassed the US in everything that matters except crude oil. And even there, they figured out a way around that weakness. If price action in the oil markets prove anything. So they make more steel, they burn half the world's coal, they make all the cars, they make all the batteries, you name it, they make it cheaper, better, faster, quicker, with more innovative potential. And you can bet your bottom dollar that same manufacturing prowess and technology capability has been shoved right into ballistic missiles, subsonic, supersonic, hypersonic, air defense missiles. They have a much larger army. And so if China is genuinely interested in sort of hegemonic global domination, then I guess we'll see a repeat of what we've observed for the past 60, 70 years in the post-World War II era, but with Chinese characteristics, as we like to say. There's a world where China decides that it is big enough and comfortable enough and just doesn't need all that noise. And aspects of Chinese diplomacy would indicate that they prioritize stability above all else, which would be a refreshing change in a way. And so then it comes all the way back to where I started my first answer to you, which is this regime change in the reserve currency of the world. And China has been working actively with Russia and its other BRICS partners since the global financial crisis to slowly and systematically chip away at the underpinnings of the British-derived US dollar hegemonic system. We gold bugs are attracted to that hypothesis because China seems to be working to put gold back at the center of sort of neutral reserve asset premier status as an asset that settles and balances in international trade. And so maybe you mix in a blockchain or two, who knows? But that seems to be where we're going. And so I started this answer by saying much depends on Beijing. And if the war in Iran has taught us anything, it's that the U.S. military is woefully unprepared to take on China. Especially with ongoing depletion of weapons in Ukraine. And so I think, I don't want to put words in Simon's mouth, but I think the hypothesis that the forever war in the Middle East will be winding down is one that is born out of necessity. And there'll be lots of money to be made in the rearming, the intra-war period, I suppose, and that has the benefit of being far less controversial. And so we'll see. But if I could tell you that the Pentagon knows the score, that if Iran could take out all the Gulf Coast bases, and they did, that means China could take out all the Pacific bases, and they can. And good luck defending Taiwan all those miles away when all China literally has to do is a 15-day naval blockade and Taiwan runs out of natural gas. They don't even need to attack Taiwan. They could win without firing a shot, except a few warning shots from the Chinese Navy. And so the U.S. is in it's dangerous for the world, the U.S.'s current position, which is a declining unipolar power in denial, with still lots of dangerous weapons and a seemingly lower threshold to use them than one might have thought a decade ago.
Simon, I want to get your response, but I also want to just kind of highlight, if I'm hearing things correctly, from Doomberg's position, it kind of sounds to me a little bit like things are happening out of necessity, like it's kind of the result of previous actions, where I think from your perspective, you attribute a little bit more to intentionality. But I want to get your overall view on what he just laid out.
Yeah, I think the directionally we're at the same place, but probably coming at it from a different perspective. I don't believe if a country like America is a sovereign country. So this kind of ties into where we probably get back to the Bitcoin story in terms of self-sovereignty and stuff like that. But you as an individual could be sovereign in a country that is captured. And so that's the case in the West. The entire West is captured by what I call this financial industrial complex, which is that the banks create the currency. All of the companies are public companies. The largest shareholder in all of them is BlackRock. BlackRock's a public company. All of the securities are created with Goldman Sachs and JP Morgan. The government debt is issued, the bond market, the stock market. The commodity markets are structurally have more paper claims than physicality. The currencies are always a tool for reallocating capital and financial power or raging wars. So you've got commodities that are derivatives essentially now. You've got currencies that are really managed via a network of central banks that are members of the Bank for International Settlements. You have a stock market whose job is to take the value of the national debt and pump it into the stocks. The bond market is simply how long can you facilitate this debt, and obviously the unique case of the US, how long are banks willing to use treasuries as collateral? And it's all managed by asset managers. And so when somebody says the US, I look at, what do you mean, the US? The US is a corporate captured government whose job is to take on national debt and pump it into the stock market. And every politician is effectively sponsored by a lobby. And that lobby is either at its extreme, a blackmail network, or just a funding mechanism for determining whether you can execute their policy. And a politician's value is how many people can I get to believe that what I'm doing is for them while I'm servicing my lobby. And so Trump's a classic example. You look down the line. Firstly, you look at his financial interests. He is deeply financialized into Middle Eastern, Saudi Arabian, like the Affinity Partners, his fund that had $2 billion from Saudi. Then you look at his actual lobby financing. At the top, it was Elon Musk, an important node in private technical interest that relies upon China. Then you had the financial Mellon family, the second largest funder, so a previous banking dynasty. And the third was Mary Madelson, which is Israel, which is a node of military power. And so he's funded by Middle Eastern interest, technical interest, financial interest, and military interest. And that's the hierarchy. So when I look at what Trump's going to do, firstly, he needs to use his military to serve Saudi interests. That's what he's being paid to do. At the same time, the lowest funder is Israel. So Israel is, while it looks like Israel rules the world, Israel is just simply a front for plausible deniability for military companies. And so you've got him servicing that need for military companies on the two-front war, unwinding of the forever war, and escalating of the European revenue, which then leads to him being pushed into a regional power. But what happens with the rest? Well, China is the one that's facilitating all of the sovereign wealth funds, by purchasing this energy, having the world's largest manufacturing base. So Iran is dependent upon China. Saudi's dependent upon China. Qatar's dependent upon China. Across the whole region, everyone's dependent upon China. Now you look at the technical companies, as you said, as Doomberg said, you need batteries, you need that whole ecosystem. So America can't produce a weapon without China. So can we stop pretending that there's even a war between China and America? What there is a negotiation, just as there is right now. And China is negotiating with private power that controls America and controls the West. So, you might as well sit down with SpaceX and Larry Fink. And in fact, they did. When we were talking about before, the meeting in Beijing was just Trump with his pool of real executives that represent the shareholders that control the bond market and the stock market, negotiating with Xi Jinping, where Tim Cook is saying, please allow me to continue my factories. I need Huawei to copy our, Huawei can copy it, but we'll keep our factories there. I need the cheap labor. Elon saying, please make sure the rare earths are continuing. We need to continue receiving those rare earths. The financial institutions were saying, look, we know we can't penetrate your financial system, but maybe we could set up a multipolar world and we could have a financial center in Dubai and Riyadh, and we can integrate those into SIPs. And maybe we just create an alternative system altogether that circumvents SWIFT, like a network of central bank digital currencies via Enbridge. And so these are the real powers. There is no such thing as the United States of America as a nation state. It is simply the military as a full rent militia for power. It is fully financialized, securitized, and now BlackRock wants to tokenize the whole country, every security, every share, every market, every currency, and it will be a programmable stable coin. That is what America is, a control grid for technical power, and that technical and military power are controlled by financial power. And that financial power is global in nature, but they can't penetrate China, so they have to negotiate with China. Because China actually, their military, financial, and technical power sits under the government. The US government sits underneath financial, military, and technical power. And so you've got that, the Chinese government negotiating with military, financial, and technical power. And they all know that there's no such thing as World War III. So how do we change the order? Well, you engage in negotiations that look like wars. And right now, the Iran war is about how do we negotiate the fact Iran, Oman, and probably a syndicate within the region of interest are going to control the Strait of Hormuz. How do we get rid of the US bases? Well, Iran, you blow them all up. Then we'll enter into, Saudi and Yemen will resolve. You stop funding the militias. We'll enter into a political process, negotiation. We'll do that across Lebanon. We'll do that across Yemen. And eventually, Iran, you're going to have to accept $300 billion of our capital, and you'll get sanction relief. We've got to determine how you're going to price your oil. Is it going to be in yuan? What happens with OPEC? And so to me, this is military escalation in bounded negotiations to determine and what the world order looks like at the end of this. And whatever happens in the Strait of Hormuz, however that is constructed, whether it's a service fee or a toll, whether it's overt. So remember the deal that they signed for the Memorandum of Understanding, 60 days where they won't charge. That's over on the 17th of August. So you get escalation, bounded escalation up to the 17th of August. You get a blowing out of the bond market leading into that. You get these taco trades. But oil and gold are telling us we're not in World War III. So the markets are telling us, but we're getting this stress in the bond markets. So the 17th of August is where Iran has said we're going to be charging a fee. And so now financial power, military power, and technical power are trying to get as much as they can using Trump and the American military to put together a facade that looks like there's something else here. Okay, what do you need? A narrative, weapons of mass destruction. We care about women's rights in Iran. Oh, this is, but what we're seeing right now is the pretense of the American empire wanting to do good is now being exposed, that really it was just a captured state. And it was the same, it's run by the same Dutch Empire, British Empire, Federal Reserve, financial power. And it's been a 400 to 500 year empire that's coming to an end. And it will be regionally controlled. Now that involves Russia saying, what's the settlement with Ukraine? China saying, what do we do with Taiwan? And Europe being just completely destroyed, so that it can be sucked up into privatization programs, and they can print a bunch of money and prop up the stock market. And so that's kind of the game as I see it right now. That's like, there is no such thing as UK. Like there is no such thing as US. There's no such thing as Germany. There's just regime changes that are sponsored by different lobby powers. And every time you get a regime change, you get a new narrative of why they're propping up the stock market and destroying the economy.
Doomberg, there's a ton for you to respond there. I wanted to get your thoughts on all that. I do want to also tag in there too. Simon specifically mentioned the bond market, the gold market, and the energy markets. We've got the U.S. 10-year sitting at 4.684. Spot gold is at 4,349, and WTI is sitting at $80 a barrel right now. I'm curious if you're interpreting the market signals in a similar way, or if there's a different read for you.
Well, what Simon's describing is his construct to view the world. We would call that a mental model. Our view is a mental model is operable if it explains the past and successfully makes predictions. A lot of people don't like to think that way and don't like to hear such views. We think that way, and we have slightly different views. So I would argue, or I wonder whether Simon would agree that in his construct, China, Russia, and Iran are actually sovereign nations. And that is one of the reasons why they're at war with the sort of blob of the Western Atlanticist global financial oligarchs, to borrow a word the Europeans use to describe rich Russians. The mental model we've been toying around with a little bit is that there were basically three winners of World War II. A U.S.-led British European bloc, Russia, and China. And the global order that was set up after World War II was funneled through the United Nations Security Council. There was a P5, permanent 5, but it was really a P3. It was Russia, China, and the U.S. And yes, France and Great Britain had veto. And our mental model is World War III has actually been happening since about 2014, when the taboo of sanctioning a P5 member, a co-victor of World War II, by the U.S. outside of the purview of the United Nations Security Council broke that system of governance, I would say, for lack of a better phrase. And so we think that Crimea.
Did you say 2014? Do you mean
2014?
like the Ukraine regime?
2014. Yes, starting with but really the war kicked off. So you had the Maidan coup, as the Russians would call it, regime change, fight for freedom, as John McCain would call it, from the steppes of Kiev. Then you had the Russian response, which, if anybody had been following, modern Russian history and the rise of Putin, wouldn't come as a surprise. So you have Crimea. But the war began with the sanctioning of Russia as a consequence of Russia's response to the Maidan movement. And so what you see then is China and Russia saying, okay, if our veto power at the Security Council does not protect us from, the weaponization of the US dollar system, and I agree that like the DXY is just the dollar. It's just, all these fiat currencies in the West trade off each other as a mirage. The strength of the dollar is not measured by the DXY, it's measured by the dollar price of gold. The breaking of that P5 commitment that, okay, the three victors of World War II will co-manage the world, and we have spheres of influence, and we are protected by the veto at the Security Council, which is before then really supposed to have been the only sort of global body capable of implementing sanctions. Then that kicked off the Shanghai Gold Exchange. That kicked off Russia selling its treasuries. That kicked off the tensions in Ukraine. Putin and Lavrov submitting various treaties to realign European security architecture, to revert back to sort of the post-World War II settlement. And so if you're relitigating World War II, that's our definition of the commencement of World War III. And then you see, the role that energy plays in all of this, which of course is how we arrived at all of this nonsense, because we're deeply interested in the flow of hydrocarbons around the world and what it means for geopolitics and economics. And so you have this alliance, we call it the, in order of decreasing relative power, the CRIN alliance, China, Russia, Iran, and North Korea. The coincidence or the commonality between those four is they're amongst the most sanctioned sovereign countries in the world at the moment. And so this is literally just a battle to relitigate the partitioning of global power, wealth in the post-World War II era. And it's no surprise that Europe is the big loser in all of this, because Europe was the most destroyed, most weakened former colonial set of powers in the aftermath of World War II. And so when you see in a fight to the death, or a fight to reorganize, or a scramble to reset the way the chairs are situated around the global table, the U.S. is discarding Europe, vassalizing it in a way that I think is shocking to many European intellectuals and elites. But that's what's going to happen to Europe when you have Kaja Kallas as your premier diplomat. You should expect to lose a few bouts with the Chinese and the Russians. That's for sure. And so here we are. That's sort of our mental model. The only critique I would say is that, I mean, I've seen this line of thinking and I agree with some of it. Most men, I might even admit to much of it. But the overestimation of the power of BlackRock is one thing that I do object to. BlackRock is a pass-through vehicle for passive investing. It's not really, having worked in large corporations and had BlackRock as a major shareholder, they're relatively passive. They rarely vote their shares. They're huge. Larry Fink makes for a great boogeyman. We've written critically about Larry Fink many times, and it doesn't matter. It's just I think a potential weakness in the narrative that could blur the soundness of the rest of the mental model. Last thing I would say is I only point that out because when we express lateral thinking and outcomes of them, people who aren't used to the language of axioms and mental models and operative models and predictive models and models that you have to discard because the data comes in and convinces you that it's no longer good for making predictions. When they hear off the wall thinking, they generally recoil at it. Sometimes it makes them angry. But also one has to be careful that any sort of nullifiable statements of fact might be used to dismiss the entirety of the thinking, which is something we guard against. Like, oh, well, this person's, I'll give you a classic example. And I know this is a bit of a tangent, but I think it's an interesting one. When I hear somebody that I otherwise respect on a podcast, and I probably consume about 6 hours a day of podcasts just because we're in the business and I need inbound information and I need to write articles and it makes for great time killing during walks. And they're making good points and I find them to be interesting and I grade them for, let's put this person in this category. And then they talk about energy and I'm like, oh my God, like they just have no idea what they're talking about. Like when I hear people talk about the US running out of oil, I just want to scream into my my iPods, like you have no freaking idea what you're talking about. And it can be disqualifying. And it's really important, I think, if you want to be a sovereign person capable of thinking for oneself, that you're able to absorb the concept, even if there's like a striking piece of information in the communication of that concept that you think is provably wrong. So anyway, it's only because this is literally the book we're writing that I'm giving this a lot of thought.
Simon, I want to get your thoughts on BlackRock maybe being a bit weaker in kind of Doomberg's position on that. I also, because it's an interesting topic, and I will come back to, I do want to come back to what you're seeing, Doomberg, in the energy markets, and of course we will touch on Bitcoin, but I do want to hit on BlackRock quick. And then Simon, I actually want to get your thoughts on developing your mental models and how you kind of reason through these things. I think it's at least an interesting topic to touch on with regards to how the audience can begin to process information.
Yeah, sure. So with BlackRock, you're right. There's so BlackRock is a lot of things. It is a passive asset manager. It has a bunch of funds. It has a very important ETF department. Interestingly, when Larry Fink was the innovator, most people attribute to the mortgage-backed security. And BlackRock ended up the one that got the contract with the Fed after the global financial crisis, and also the COVID contract as well. To me, it was about data because the most important thing that BlackRock has is the best data in the world. And so it's Aladdin scenario planning combined with passive ETFs, combined with the sum of their allocation. I mean, let's say there's $20 trillion in Aladdin. Let's say there's $12 trillion of assets under management. Let's say 5 trillion of it may be managed and the rest of it is passive and ETFs. And after the global financial crisis, BlackRock ended up with the Barclays ETF division, which is when it became significantly more powerful. But when a lot of sovereign wealth funds, a lot of central banks, a lot of treasuries, a lot of pension funds, in fact, a real large pool of capital is using BlackRock Aladdin in order to scenario plan some of the best data, the best in intelligence software you can use. So if you're telling your Aladdin that you would like to scenario plan what happens if the Strait of Hormuz, what happens if there's an invasion and then the Strait of Hormuz happens here? It's through capital allocations that you're able to move capital in a more coordinated fashion, knowing that 50% of trades are done by bots as well, and algorithmic and high frequency trading. And so it doesn't have to be a man, Larry Fink, on a board that is able to control the world. It is, in fact, pools of capital with access to data that can, in a non-conspiratorial way, determine the shape of markets. And I think that's a position that is accurate in terms of where BlackRock is. Then you combine that with the fact that when everyone's pooling together their capital, that gives you board seats. And you have the ability to join the World Economic Forum as an interim chair. And then your investment officer also gets a role at the World Economic Forum. Then you're able to say something like, if you don't prioritize your ESG score, then that determines how we allocate capital. And everyone knows what that means. It means if I need capital, I need to prioritize. And every country right now, as currency wars, as the American empire is becoming less of a nationalistic empire and more of a privatized corporate capture, ETFs and the flow of ETFs into your country and that passive bid is significant in terms of if no one wants to invest in Saudi, but they're investing in the BlackRock Saudi ETF, like you have leverage. And that leverage can be utilized and those board seats can be pressed. And the sovereign wealth funds are also using your software. So there is a degree of centralization that's emerged here at the same time as everything going towards technology, programmability, tokenization, social credit scores, and stable coins and tokenize everything. So I think we can read ahead and see where we're going here. This is programmatically being able to allocate capital in an optimized algorithm. And, a situation where this whole K-shaped economy is causing such concentration of wealth up to those that control the money printer, that you will own nothing and be happy. And be happy means we'll give you a stable coin as a universal basic income, and we end up with the asset. You custody the assets with us, we'll give you the token. And I think you can look at the numbers since the global financial crisis and see where BlackRock's assets under administration are taking it.
Very interesting. And then Simon, just quickly on that second part with regards to mental models and how you're thinking about these sort of things, I would just love to even get a couple quick words from you on that.
Yeah, I both Doomberg and myself have taken time out to write a book, so you've got me at the right time. So the book that I'm writing is really figuring out what are actually the subordination layers and the sovereign layers. What makes a country sovereign? What makes it subordinate? And so to me, there are when I look at wars, I look at the battle for subordination, leverage, and you're able to resist with sovereign. So if you manage to keep your energy, like Iran did or Saudi did, then you have a couple of directions. You can either do what Iran did, which is fund a network of resistance that gives you leverage in negotiation to try and get your sanctions removed because they didn't install a bank and make you subordinate to them. Or you have another way of going, which is, well, why don't we become like Saudi, offer the petrodollar? We'll form OPEC. We'll make sure everything's priced in dollars. We have pacts in order to negotiate. But if we're able to keep our energy and slowly get more and more of our energy without you, then we can fuel a sovereign wealth fund. And by fueling a sovereign wealth fund, we invest in all your tech companies. And therefore, the financial industrial complex partners with us over the national interest. And so to me, then you've got the extreme. You got China, which is the most sovereign country in the world. It's got its own, it's got its own Belt and Road Initiative. It's got all corporate power is underneath the government. But when a government is very sovereign, and the countries that are sovereign, Doomberg talked about them. He was talking about Iran, North Korea, Russia, China. When a government is more sovereign and it's a spectrum, the reason that Putin became public enemy number one is because, he was trying to expel the oligarchs and resist privatization over national assets. And so he was told that he's the next Hitler, right? And so the narrative, he goes right back to the media, is based upon how can you take a sovereign country and make it subordinate? And there are a number of ways to do that. You have strategic choke points. We're seeing that, the weaponization of the Strait of Hormuz. You have proxy wars, funding different militia groups. And just so you know, America is the largest state sponsor of terrorism in the world by far, significantly more than Iran. And even that word, I would argue that the Ukrainians are being used as useful idiots and tools, thinking they're fighting for their country, but they're in fact a pay-for-rent militia for military power. And that power doesn't help Ukraine. But to me, it all comes down to that. And so once you live in a very sovereign country, what I've noticed is that often the people, it's more authoritarian. And so the people are more subordinate. Whereas you take America, you got freedom of speech, all these different things. You got a fully captured government that is fully subordinate to private corporate power. But the people may be more sovereign in terms of their freedom of speech. But they don't know who they answer to. So they think they answer to the government, when in fact, private corporate power is significantly more powerful than the government. And so you get this whole covert power mechanism that distracts people into thinking this is a democracy. And then you've got those two extremes. You've got that authoritarianism, then you've got a fake democracy. But really what's happening across all of these, it is the largest pools of capital within each country controls the countries, whether it's, the private corporate power in America, or whether it's the CCP in China. And so that's really, it is the game. The book I'm writing is called Game of Money. The game of money is for a country to utilize as much of its remain as sovereign as possible by utilizing the assets that it has. And the empire always wants to take those assets, whether it's through financial, currency wars, covert wars, or whether it's through physical military wars, or whether it's through technology and data. These are the things. These are the things that determine whether your country is sovereign. And then there's you at an individual level and your business as well. So this is kind of what I'm trying to mentally map out at the moment in this book.
Love it. Doomberg, I wanted to jump back for a moment because, of course, your area of expertise is like the hydrocarbons, the energy space. I want to know if there's anything in particular, maybe over the last couple of weeks, that you've noted. I'm surprised to see oil not higher than it currently is, but I was even at the beginning of the Iran war breaking out, so that doesn't necessarily mean anything. So taking a look specifically at the energy markets, and maybe we can even tie that into the recent rise, the recent kind of little run up in gold we have here. What exactly are you seeing in markets, and what are you kind of making of it?
Sure. Before I do, I just want to say that, Simon, I don't think this interview is going to be accretive to your social credit score.
Just definitely not.
Probably not going to help.
Just FYI. Expect a call from Big Brother here. The thing that the big aha moment for me. So I'm recording later today, knock on wood, with my friend Nate Mack over at Canadian Prepper, and I like Nate. Nate's a lateral thinker. He's successful on YouTube. I'm sure you know his channel. And I put him on in my early morning walks, and last week I'm walking around and getting my steps in, so my cardiologist says I got a chance, and I listened to the guy, and he takes a dig at Doomberg, and I'm like, Nate, like, I thought we were friends. It wasn't really a dig at Doomberg, but he was making the point that I've been on his show saying that the oil price is important signal back to this whole inbound information and grading and what does it mean? And I think that the oil markets in particular should be listened to. And then he sort of recalled that. And in this monologue, one of his World War III updates, he said, friend of the show, Doomberg, which is always, get ready for the dig. And he says, that the oil markets are efficient, but then, look at the Korean Stock Exchange, down 25% in one day. Markets aren't efficient. It's all over the place. You can't argue that markets are efficient. Well, that was a big aha for me. And probably going to relitigate that question with Nate later today. But your question is around energy markets. The oil markets are wildly different than the stock market. They have a different purpose. They have a different structure, which serves that different purpose. And then they have, broadly speaking, different participants. And I think this whole question around why isn't oil 150 when people are convinced it had to be, and then the quick pivot to manipulation, which is made easier, by the way, by the clear insider trading that's going on in and around the White House. But that there's a difference between insider trading and overall manipulating the price of oil.
I just want to quickly jump in. The fact that they're selling early access to Truth Social,
right?
It's like, oh my God, guys! Like we're just out in the open now.
I think whatever your views of Trump were before his second shot at the Oval Office, this has been wildly corrupt. I mean, it's just overt, no pretense. I mean, give me a break. Oh, and back to my answer before we trigger all of the partisans that are still listening. The oil market exists to ensure a steady supply of crude to refineries at a price where they can earn a spread, making diesel, jet fuel, and gasoline. That is it. That is the purpose of the oil market. It is to ensure a steady supply of crude to global refineries at a price that allows them to make a spread, making diesel, gasoline, and jet fuel. And every word of that purpose is really important for people to understand. The structure of the oil market fits that purpose. Expiring contracts settled mostly by delivery, where crude grade, location, and timing determine price. And there's two forcing functions that sit atop the oil market, which is delivery and consumption. Oil is delivered somewhere and consumed. And the purpose of the stock market is wildly different. The purpose of the stock market is to assemble risk capital to fill the equity stack of company cap tables. And stocks are basically immortal up until an M&A or a bankruptcy or a buyback. They could trade forever. They trade on the pink sheets. Sometimes you see Hertz going up 50-fold because some people decided in a group chat that they're going to manipulate the price higher. To point to Hertz or Korea and say that's why oil's not $150 is just a fundamental misunderstanding of what the energy markets are. They exist to serve the human endeavor, which is, of course, ever more consumption of energy because your standard of living is defined by how much energy you get to waste, and everybody everywhere wants a higher standard of living. And so in order to ensure a steady supply of oil to refineries at a price that allows them to earn a spread, making diesel, jet fuel, and gasoline, an enormous amount of things happen. And so that oil never got to 150. Hand up, we thought it would. We're wrong. Not afraid to be wrong. Not afraid to admit when we're wrong. Always interested to learn why we were wrong. And the fact that it dropped below 100 pretty quickly and stayed there, we think is meaningful information. And to think that it's just manipulation and then to go on Twitter and say it to your 500,000 followers and cause a bunch of people to get long oil because they believe the manipulation is temporary and has to blow up, I think is quite dangerous and irresponsible. But I digress. The energy markets are telling us that two of our overarching mental models are in fact in play. The fungibility of hydrocarbons is growing. Arbitrage is a powerful force. China flexibilized 4 to 5 million barrels a day of crude demand in a way that nobody thought was possible. Much more crude oil has been leaking out of the Middle East than people thought when the closure of the Strait of Hormuz took 20% of global oil offline. Well, it turns out it didn't. And the net effect of all of this is that Iran is overestimating its current leverage. Look, I think the war in Iran by the U.S. was a catastrophe for the U.S. which I still think exists. It might not be sovereign, but it exists, and it's still the way we analyze it. But Iran assumes that they close the Strait of Hormuz, they will catalyze a global calamity, and that's just not true. And if that is their theory of victory, to borrow a phrase from a really good Substack we found during this called Policy Tensor, and I want to give him credit, came out very early with a very prescient call on March 6th that this was a strategic defeat for the U.S., inevitably so, and we agree. But as we wrote last year in a piece called Straight Shooting, like the closure of the Strait of Hormuz is a card that can only be played once because the beating heart of energy is going to find its way to market. When you close down one blood vessel, other blood vessels form. And so one of the ironies, one of the things we're playing with, and we haven't wrote this up in a piece yet, lots of things don't make it to the masthead, is that oil staying below $90 is actually quite risky for a much greater war, because Iran will have overplayed its tactical leverage, short-term leverage on the Strait of Hormuz, and become desperate and start blowing up the assets in the Middle East that underpin all of this, which I think they've been hesitant to do out of fear of triggering a nuclear response. Because there's a lot more nuclear weapons around the Middle East than people are modeling. Let's put it that way. Wink, wink. Nuclear deal with Saudi Arabia. And there's always, of course, the Samson option, right? And so the fact that all of these workarounds have been so quickly found is surprising, consistent with an overarching mental model that the spice must flow. And, lots of things I disagree with Scott Besson about, but nobody would argue that he isn't intelligent. And he was on TV over the weekend saying, we're going to wait, we're going to smoke him out. We're just going to wait. Trump himself signaling to CNN over the weekend, like, yeah, we're just going to do the Syria model. We're going to siege Iran. They think they've got power over the Strait of Hormuz. We'll build underground pipelines. The spice is going to flow. Sure, there's still choke points. Let's see who could win a real war of attrition. Yes, we might be out of interceptors, but if Iran doesn't escalate, its power dissipates. It's a ticking clock. And so ironically, the longer oil stays below 90, and I should say by oil, I mean Brent front month, because there's 1,000 different prices for oil. The longer that happens, and global calamity because of Iran's chokehold over the Strait of Hormuz becomes a non-event, the more desperate Iran gets, because it sees what it believes as the spoils of its initial victory, which I think is just undoubtedly what happened, slipping away from them. So that's probably more than you were anticipating for a relatively simple answer, but that's, as of this morning, how we're looking at the energy markets.
There's a little bit of an interesting thread there, Simon, I want to toss to you. This idea that Iran might escalate not having the leverage that it necessarily thought it had with the closure of the Strait of Hormuz. The first thing that immediately came to mind for me was the Hollywood ending that you've talked about before, that this could possibly be the reason to trigger an escalation that is ultimately the end of the war. But just pulling two things together, want to get your response.
Yeah. So the reason that I believe oil isn't at the price that people are expecting is because real capital knows that a deal is going to be done. And if you move past all the propaganda on every side, you see bounded escalation that seems to correct itself with an element of short-term trader market manipulation. But throughout like the first phase, whenever the 10-year got to 4.5% or the 30-year got to 5%, you had a taco. And most Tuesdays that was happening because the bond market was deciding. And there is bounded escalation. But real capital knows a deal's going to be done, is what the markets are telling me. And I think if this was potentially, or real money thought there was going to be World War III, and I think gold would be higher, I think oil would be higher. I think those would be moving in sync. And the bond markets are showing the stress that they should be showing. But that coincides with a realignment towards multipolarity, i.e. foreign central banks trying to figure out what their strategy is with their treasuries. Gold price is increasing, and therefore gold becoming a bigger part of their reserve strategy than treasuries. And so you've got this accumulation of gold from foreign central banks. You've got the cost of the US debt increasing, but then you've got this massive stimulus of growth in AI and everything. So you got this growth that you can't have the average cost of the debt increasing above the growth rate. So what I see in that side is a stimulus towards growth at all cost. Doesn't matter who it affects. Sacrifice the dollar if you need to, whatever you need to do. Don't allow anyone unnecessary to sell their treasuries because the bond market is deciding. But the oil and gold markets are saying there's going to be a deal. And so I believe, when I look at everything, both geopolitically and looking at the markets, the deal's going to be done. Now, how long it takes and how long you're bound those escalations in order to get the best deal. So if you look at what has Iran got left, there was Operation Economic Fury, which certainly impacted their currency valuation. It created inflation. I think it's at like 80%. That's not sustainable. But the IRGC is very insulated, and there's the two-tier system within Iran. You've got the government, the reformists, the pragmatists, call them whatever you want, that are mainly aligned with China. And then there's that massive dependency upon China. So China's been pulling its leverage at different stages. At certain stages, it's been purchasing, the oil. At other parts, there was what can get through the Strait of Hormuz. And then there was, the different things that we've been seeing with oil with China in terms of its strategic petroleum reserve. And so to me, I see China having significant impact on the oil market because they knew this was coming. They built up the largest reserves in the world. Just like there was movements before the Venezuela operation. Just like in Syria, things were allowed to happen. Because in my estimation, real power is negotiating. And then they're doing a show, and then that leads to an outcome where the next phase of the negotiation is happening. And so for me, Iran and America have been negotiating for years. It's gone through different phases. But what it looks like to me is that Iran has decided that its leverage over Syria, Lebanon, Yemen, and Gaza is concluding. It's coming to an end. And in order to take those lever points away, which Iran had, then it's negotiating with those leverage points around sanction relief. And then what else has it got? So the economy is bad. Well, you've got quite a lot of a unifying force around the Iranian identity with the people. I think it's gone in the opposite direction. I think a lot of people were dissatisfied with their leadership, but as soon as this happened, there was a rally around the flag. So the thought of a 1953 Operation Ajax overthrow, I think, has gone as a Syria strategy. I don't think that exists. But I see Iran, China, and power negotiating. And I think you will see around about the 17th of August or shortly after what the deal looks like. Maybe the Strait of Hormuz is initially controlled by Oman, with Iran getting what they've agreed to. But there's a spectrum in that negotiation, but it's happening. And then there's other interests. There's Saudi interests, and Saudi's able to say, all right, well, we need to resolve Yemen and we need to resolve these ports. I'm seeing resolution on a scale that I've never seen before in the Middle East. To me, this is, the forever war coming to an end. Who has the relative power? What are the pacts that are needing to be formed? And the destruction for rebuild. And so whoever invests in Iran in that $300 billion, which I believe will be the Gulf countries, will determine the shape of this order. what happens with the rebuild contracts of the bases that Iran has been destroying the US assets. And then you look at the countries that were the leverage points, which is Lebanon, Yemen, Gaza, and those are all moving towards state and integration of militia groups into army and state political solutions. So to me, what looks like chaos is a managed transition exit of the US from the region, a recognition that the Middle East is now West Asia again because China's the most important player, and everybody acting in their own self-interest to try and get the best deal, but it's always bounded escalation. And that's why the markets aren't reacting, because real money knows that there's going to be a deal.
Very interesting. Doomberg, I do want to get your thoughts on Bitcoin here, and I'm going to tag in a little bit. So, Simon, you and I are going to do another podcast after this to go deep on some technical infrastructure problems that we've been having there, and some chaos in Bitcoin, as well as chaos in Bitcoin kind of governance and a recent fork. And Doomberg, I would actually expect that you might not even be aware of what has happened in Bitcoin over the last week or so, because you haven't been on Twitter since, I think, 2023, something along those lines. If you're not familiar, just quickly laying it out, there's a whole bunch of Bitcoin infrastructure that hacks and vulnerabilities were found. We had over 100 million in Bitcoin from the cold card low entropy vulnerability wiped. We had a contested kind of fork that happened just on Saturday here. And the two things I just wanted to tag in, even with just that information, if it's the first time you're hearing, is one, I'm curious how you're interpreting, Bitcoin's price, maybe Bitcoin even relative to gold right now, and where you think things might be going. But then additionally, if there's any of that lateral thinking kind of instinct, for me, it definitely, if you're going to attack Bitcoin, definitely looked like it was being attacked. It could all just be coincidence or as a result of the Chinese AI models just and their recent capabilities. But I'd love to get a little bit of that lateral thinking in terms of the chaos that's been in Bitcoin and what you're kind of seeing in the charts there as well.
Yeah, so I've been peripherally aware. I guess I should confess at the outset that I'm a Bitcoin aware individual who happens to be a no coiner. My first private investment in an equity that had something to do with Bitcoin, I think, was back in 2016. I took a screenshot of the price of Bitcoin at the time. I think it was like $195. But I've never actually owned a Bitcoin. I don't have a key, so I guess my wallet is of the physical variety. I have a keen understanding of the attractiveness of Bitcoin, the overlap in the Venn diagram of people who want to own Bitcoin and people who previously owned gold is more extensive than the gold bugs would probably admit. They're an outlet of the same impulse, which is back to personal sovereignty, which is kind of how we started this whole thing. And so I understand it. I'm sympathetic to it. I've written critically about shitcoins and crypto, especially in the early days of Doomberg, which I think earned us a bit of a following amongst what I would characterize as Bitcoin maximalist, which I don't view as a derogatory term, at least when I use it. So that's a bit of a preamble. I think that's sort of like a disclaimer. I think Bitcoin, the reason why many gold bugs like me don't own it is because there's always been these background questions about the encryption, it's NSA software, quantum computing. Like when my American Gold Eagles arrive in the mail and I test them against my various devices that tell me whether or not it's a legit coin, I kind of can hold that and I put it in a safe, or I put it in a safe deposit box, or I bury it at some remote property that I own, and leave a treasure map for my kids if I ever succumb to a heart attack. And so I prefer the tangible. It's sort of a Darwinian, the reptilian part of your brain, an instinct. Like if I salt my meat and hang it where I can see it, the lions won't get it. And so that is all to say that I've always, in the back of my mind, been concerned about the digital nature of what is really a store of value. So last thing I would say and then we could talk about Michael Saylor for 45 minutes if my bladder lets me.
Yeah.
Is when you look at like money today, there is no money today. Is one of our arguments. So money has three functions: store of value, medium of exchange, unit of account. There's no single entity thing that performs all three. Currency is not money. Fiat currency is wonderful as a medium of exchange. It's a terrible store of value. Gold is not money. It is a very good store of value, but is a terrible medium of exchange. It's a decent unit of account, I suppose. And Bitcoin is not money because you can't use it to buy anything either. And so the attributes of Bitcoin that make it an attractive purchase for the sovereign individual is you could put an awful lot of value in a thumb drive and slip through a border and nobody's going to know what you're carrying. I mean, that's really at its essence the one of the most attractive things about Bitcoin. Now, anytime you say anything about the vulnerabilities of encryption vis-a-vis Bitcoin and not your keys, not your wallet, and cold storage, and you trigger a hornet's nest of hardcore. I don't know even what they are. One of the reasons we left Twitter is just like it's not worth it. So I just want to like, sorry if that offends you, but like I do feel sort of validated in the sense that I'm no expert in quantum computing or AI or advanced whatever, but I do have a graduate degree in one of the physical sciences, and I'm capable of personally determining with very good odds whether the coin that Mr. APMEX delivered is money good. So I understand why people own it. I view the vulnerability exposed in the past few weeks as interesting, but also I'm kind of getting more to the school of thought of the sort of Ben Hunt, in praise of Bitcoin with an exclamation point. Bitcoin has become a financialized product of Wall Street. BlackRock has a Bitcoin ETF, to use the boogeyman du jour. And so at the same time, most of my gold exposure is through Sprott physical gold trusts, and I'm counting on the fact that there's a vault somewhere in Canada that the government won't confiscate. There's no risk-free way to port wealth through the generations, but to the extent that economic chaos, the great monetization event, and so on, are pressure points in the psyche of people aspiring to be sovereign. I can understand the attractiveness of Bitcoin. Which brings me to the simplest answer to your question is I think we're about to experience regime change where you just need to get long something. And if you're a fan of Bitcoin, then you better get long it because the US dollar is going to become a lot weaker in the next 5 to 10 years as measured in whatever unit of account is your preference. And I measure my net worth in ounces and acres. And if you measure your net worth in Bitcoin, then get busy buying some.
So I want to get your response to that. And Doomberg brought it up, so let's tag in Saylor there. I think it's at least an interesting point of conversation if his bladder can hold.
Yeah, I think Doomberg brings up an honest conversation. And so as Bitcoiners, I think what's been happening over the last few years is it should be very humbling for a Bitcoiner. But it hasn't actually taken away my conviction or thesis. There are parts of what's happening to Bitcoin that I see as very strategic attacks. But it's an honest conversation is required because the reality is that those that held their Bitcoin in custody got wrecked in the last cycle, and there are some people that held their Bitcoin in self-custody and discovered that a hardware wallet and a particular vulnerability on that hardware wallet led to them losing, for some people, all their savings, which is heartbreaking.
Yeah, friends of mine.
Exactly. But I guess when I'm analyzing war, I always try to separate my role. And there's a humanitarian person that analyzes what I want to happen and what is happening. And then I get to my analysis, and my analysis is the opposite of what I want to happen and what is happening. And so sometimes you have to separate, right? And me analyzing something is not me advocating for something. My advocacy is the human spirit, the humanitarian side. My analysis is, well, it doesn't matter what I want because I'm irrelevant, but here's what's happening. And here's what I think's happening. And sometimes I'm wrong, sometimes I'm not, but this is what I think's happening. And so the reason that I say that is because on the humanitarian side, tragically, people lost their savings. I have direct experience for 15 years since I got involved in this of people getting wrecked and losing. And I've got direct experience of people that are deep in debt and are now billionaires. So I've seen the whole spectrum, and the decisions that you make along that spectrum teach you something. So what happened to Cold Card, the entire community and the entire sector is stronger and wiser as a result. And sadly, somebody had to take the hit for that. Because now everyone understands what entropy is. Everyone's looking into what happened with Cold Card. And most importantly, Bitcoin worked exactly as it was designed. I'm not going to go deep into it, but this weekend we had the polar opposite of the 2017 war. And we learned what this means for Bitcoin. We're also seeing in real time what the centralization forces are, what that means. And so in Bitcoin, if you're having an honest conversation, Bitcoin does things that gold can't do. The ability for me to store my own value and send it to anybody, and if I want to use it as a medium of exchange, it's deeply integrated into the fiat rails. You can just go back to the old. You can have a Bitcoin debit card and you can spend it anywhere. So you can use it if you want. You have to go into those rails because most people aren't accepting it. That's real. And to have a fixed money supply. These are the three things that Bitcoin does. Now, we know for 17 years that we've learned Bitcoin has become stronger each one of those years. But to compare it to something that survived 5,000 years of attack is a dishonest conversation. Because the risk profile of gold and Bitcoin is completely different. And so I think the way that Doomberg was presenting it, there is a spectrum of risk within how to be sovereign. You either take a pile of cash and it just it's the worst, it's the worst store of value ever, and you end up with nothing. You end up with gold, but it's very hard to use as a medium of exchange. Or you end up with Bitcoin and you got to deal with these risks around self-custody because you're in the digital sphere. And your job is to take your ratio of where you sit on that risk profile, because I don't know anything else that's sovereign. Those are your three choices. Everything else is within the sphere of custodians. And you can even take those assets and hold them with custodians. So but the sovereign part of cash, gold, and Bitcoin is your only choice. So how are you going to manage that and manage those risks? Well, you just need to understand the assets, what they do and what they don't do, and pick your percentage. But Bitcoin does, I think, uniquely give you the ability to store your own money without, own your own money without a bank. Send it without the government deciding what you can send before you send it, and take it anywhere, knowing that the monetary policy is never going to change with whatever a central bank does. Now, if we custody it, the rules change, because you're not storing your money when you custody it. You got a Bitcoin IOU. And you can't spend it when you got a Bitcoin IOU because somebody can say you don't meet the KYC source of funds and source of wealth requirements, and we need to put a travel rule on top. And by the way, you're getting incredibly wealthy. Maybe I need to file a suspicious activity report. I tell you what, why don't you just have a tokenized version of it, or something like that? And what we're trying to discover now is, can these centralizing forces change anything. And that's what we're discovering in real time. And that's what people need to understand if they engage in the Bitcoin community. But there is an attack called centralize as much as you can and see what you can change. And we'll find out whether they are, whether it's miners, whether it's economic nodes, whether it's developers, whether it's exchanges, whether it's Bitcoin treasury companies, whether it's strategic sovereign reserves, whether it's legislation, regulation. All of those attack vectors are continually attacking. And I think it's remarkable that Bitcoin's at $65,000 relative to what's happened over the last few months. And to me, there's only one choice here. The choice is, think of your entire life. What assets are you going to accumulate throughout your life? You're probably going to want to live somewhere that you own and is not a bank. You're probably going to want some gold. You might need a little bit of cash to meet your needs. But I personally believe that everyone wants to accumulate Bitcoin. And so across your whole life, what percentage of your things that you buy are you going to be allocating towards Bitcoin? Because it solves a unique purpose that nothing else solves. And we're going to find out whether it can be taken down by a quantum computer or whether the centralizing forces can change anything. But so far, it's implied to me that they can't, and there's a solution for everything, and every disaster leads to a stronger Bitcoin.
I love it. Doomberg, I do want to get your thoughts, at least quick there, on Sailor in particular and what Simon said. But I also just got to quickly throw out there because I do YouTube thumbnails for a living. I'm not sure if you saw Michael Saylor on Diary of a CEO, but I think I nearly fell out of my chair when I saw I made $15 billion using ChatGPT. I was so surprised. They just threw that right out there. Anyways, just wanted to tag that in to get your thoughts.
Yeah. As a guest on many podcasts, I will say that once it is in the can, the guest has very little say in the thumbnail, as you know.
Yep.
And I remember once being on a pretty high-profile podcast where the host kept asking me what would it take for oil to get to 300, and I was saying it's practically impossible. But then I kicked out one final solution. Okay, well, if you pressed me, here's a 1 in 100 chance that oil could get to 300, and guess what made it to the thumbnail?
Yeah.
Meanwhile, I was loudly bearish oil on every other podcast and in our writing, and so this thing triggered all manner of what the hell's,
They got to get their freedom of reach.
Yeah, look, we're all in the clicks business. I get it.
Yep.
And so I would say I don't disagree with anything that Simon said. I do think as a sovereign person, you have to adjust the weights of your allocation against your goals. Do you want to bequeath your family with something? Where are you on the nepotism scale? I personally am strongly biased towards being a responsible provider. My personal allocation is I earn in fiat. I live in the fiat world. I spend in fiat. I save in real assets, which is the category that I would put Bitcoin, even though I don't allocate to Bitcoin. I have many real assets that I do allocate to: golds, land, collectibles, watches, cars, pick your favorite. These things tend to do reasonably well as a store of value. And if you find entertainment from them or you have some particular expertise you've developed, all the better. And then I invest privately where I personally can, or my team and my partners can impact the outcome. So I don't own any stocks, which makes it easy for us to write about them under the Doomberg masthead because I don't have any skin in the game, which cuts both ways in this world. Some people believe you need to have skin in the game. Other people believe that you're just talking your book if you do. And so how one allocates, your savings ratio, because I don't believe that Bitcoin should be viewed as an investment. I believe that Bitcoin is a store of value, intellectually very similar to gold, just a different manifestation of that impulse. The reason why gold has 5,000 years is because computers weren't around 4,950 years ago. And so, there is no alternative to gold that has the track record by definition. It doesn't necessarily mean the track record will survive. Look, gold has its own challenges. We once wrote a provocative piece that upset many gold bugs, which is to point out that refineries are the big bank money laundering choke points where the government can exert control over the gold market. They've confiscated gold in the past. And so there's no really escaping it. And I personally have decided that I'm going to defend my castle. I'm staying in the US. I'm going to stay in my neighborhood. I'm going to, when they want to get me, they'll have no shortage of reasons. There's no real defending against the blob. And so that's sort of my own personal ethos. And off we go. I hope I have a good credit score, social credit score at least, while still maintaining some semblance. I know. Right. And so, with some semblance of sovereign thought, at least, until they figure out the Neuralink interface where they can police my thoughts directly as opposed to indirectly via algorithms. So, then let's move to Saylor. I think I've been fascinated by Michael Saylor. I know we've talked about him on the show before. He's a very smart guy, interesting character. I think the fluidity with which he is demonstrating his willingness to sell Bitcoin to prop up the experiment is a shrewd one. One I wasn't sure he'd be willing to take. And the normalization of his willingness to do that will come in handy in a true emergency. And so credit to him. I know he's very controversial, especially in the gold community. I listen to the people trying to convince me that, STRC is a Ponzi. It's not a Ponzi. It's not a Ponzi because he's committed to Zimbabwe, the equity to support it. So you're basically, I don't know why people would want to buy the MicroStrategy equity, but the preferreds, which have a committed yield of 10%, no obligation, of course. And the preferreds and the debt are chopping away at the senior claims of the Bitcoin allegedly held in custody on Saylor's behalf. And so I don't know why you'd want to own the common if you just go buy Bitcoin, but if you want to own the preferreds, which have a promise of a dividend that can be paid by Zimbabwe in the equity, what do I mean by that? He can print common stock as much as he likes, even if he sells it for a penny, and keep hitting that dividend. I'm not saying he will. It's not investment advice. It's yielding 10%, 12% for a reason. There's no free money. But it's not a Ponzi in a classic sense because he could just Zimbabwe the equity. And so he has created a levered instrument that does really well if the dollar collapses, and to the extent that people are interested in getting exposure to that through the traditional rails, because he has done a really good job of disclosing everything. It's all by the book. It's all totally legal, especially in this embodiment of the SEC. Last thing I would say, just to put it out there, I once had the chance to interview Michael Saylor.
Really?
Yeah, and I blew it. It was I was a co-host of a podcast that had him as a guest, and the way it was structured was my co-host got the first half of the interview, and I got the second. And I tried to get him on record about how he custodies MicroStrategy's Bitcoin, and he was very evasive because I had a developing mental model at the time that there might be some smoke to that question. And he's a slippery guy. He's a very smart guy. And by the time it got to me, the interview had kind of fallen off the rails, and it didn't land well. And I got a lot of feedback that I, quote, missed my opportunity. But I've never been able to fully extinguish that question. Like, where is MicroStrategy's Bitcoin? Who custodies it? Maybe he's disclosed it since, and maybe it's like a big nothing burger. But anyway, that's my one brush with history where I superficially interacted with the man himself on a podcast many years ago.
Simon?
Yeah, all right. A few things I'd say here. So firstly, as we always want to talk about people. I tend to avoid people because I don't like, I always just talk about incentive and structures. And I think it's easier because it takes the edge off. And so what is Michael Saylor? Well, he's an executive of a public company, which means he has a fiduciary duty to his shareholders. At the same time, he has bondholders, he has different financialization products, whether it be structured products or whether it be preference shares and convertibles. And so he is a guy that rose out of the controlled demolition of a lot of our sector. And as a executive of a public company, which has a very, a deep history, and that deep history is around during the dot-com boom and bust, crashing his share price by over 90%, surviving all sorts of things. And out of the ashes, we have a company that offers intelligence services to the government, the US government, a division that is called Strategy Government Services that employs a 26-year veteran of the CIA in charge of covert operations for the US government, other people that work for Department of Homeland Security. So an incentive structure that relies upon working with covert operations and intelligence and a board and chair accordingly. And suddenly we get Michael Saylor as a character that is entrusted onto the Bitcoin community. Just like in 2017, there was no one called SBF. And suddenly there was SBF out of nowhere. Saylor came out of nowhere in our industry. And he gave the best pitch for Bitcoin. And so everybody built a relationship with him and he kept buying Bitcoin. And so he had a massive premium to net asset value, 3.5 times, because he transitioned from an intelligence company to Bitcoin strategic reserves and a Bitcoin treasury company. So that's the background. How did he get into Bitcoin? Well, he bought Strategy, the company, bought a domain from EOS. EOS was a company that was co-founded by Brock Pierce. Brock Pierce was the conduit for Jeffrey Epstein in trying to infiltrate various people within the Bitcoin community, whether it be developers or whether it be investing in companies like Coinbase. I was one of those early investors in the private equity of Coinbase. I sold my shares when it went public. But what is Coinbase? Well, Coinbase is now a public company, and the US government holds their Bitcoin with Coinbase. BlackRock holds their Bitcoin with Coinbase. Strategy holds their Bitcoin with Coinbase and Fidelity. And Fidelity came into Bitcoin in 2014, the same year that Brock Pierce started these and Epstein started some of these investments in Coinbase. And so follow the money and you've got an interesting story to follow. But what is Strategy? Strategy is a vehicle that if it succeeds, and it has succeeded to one of the highest performing share prices since adopting the Bitcoin strategy, and significant liquidity around structured products. So it is a vehicle that had a significant premium and is now doesn't have that premium. And so it's very hard to sell the equity when the Bitcoin is worth more than the equity. And so what do? Well, you create other products. And when you create other products, you now have a vehicle that if it succeeds, it would centralize as much Bitcoin as possible. If it could, it would issue as much equity, as much debt, in order to end up with 21 million Bitcoin, if it could. Or there's a point at which it stops. What is that point? Okay. So it is designed to sell securities and end up with as much Bitcoin as possible in Coinbase and Fidelity, the same place that the US government is putting their Bitcoin. Right, we have now a vehicle for trying to get as much Bitcoin in custody. It is a centralizing force, whether inadvertently, covertly, overtly, or whatever. It is now got a bunch of financial products that create the ideal arbitrage vehicles for some of the most successful hedge fund managers in the world, whether that be Citadel, whether that be Jane Street, the same Jane Street that is an appointed person for the Bitcoin ETF that is issuing shares that you can arbitrage around the Bitcoin in Coinbase. And so what has been built, an industrial complex around Bitcoin, whose specific purpose is to centralize as much Bitcoin as possible, create arbitrage vehicles, which very successful hedge fund managers can utilize in order to get risk-free trades that impact the price of Bitcoin. At the same time, you have people like Cantor Fitzgerald that are trying to say, strategy did it. Why don't you do it, Adam Back? Why don't you do it, Jack Mallers? Why don't you do it, David Bailey? And why don't you also fold in your media company and fold in your self-custody wallet and fold in your services for borrowing against your Bitcoin and solve in your shop Blockstream that was accepting funding from Epstein as well? And so all I see is a set of incentives around trying to centralize as much Bitcoin as possible, and it ends up at Coinbase. And so these are centralizing nodes. Now, I don't want to get into anything else other than that. That is what it is. It is an arbitrage vehicle, and it centralizes as much Bitcoin as possible. And if it could, at what point do they stop selling securities to buy Bitcoin? Well, now they sell some of that Bitcoin in order to meet the needs of the dividends. So they are now subordinate to their preference shares, their bondholders, their dividend commitment. And so the financial industrial complex of investors, shareholders, bondholders, preference shareholders, whatever, he is who he works for. And Bitcoin survives because right now about 70% of all Bitcoin is in self-custody. And all of those are doing the opposite. And so that is just, as a Bitcoiner, you just need to be aware that that's the opposite side. And if you own strategy shares instead of Bitcoin, then you are making Bitcoin weaker. And if we hit a certain point, then if they get all 21 million Bitcoin, which will never happen because so many have been lost, but there's a certain point at which Bitcoin now faces a threat where Bitcoin doesn't do what it originally did if it all ends up in custody. And that's the spectrum. That's the game. Now, fortunately, there are many resistance against that. And so if you are trying to preserve Bitcoin, you either sit on the side of trying to make as much money, or you are in the sovereign game. And if you're in the sovereign game, then you need to join the battle. And one of the enemies is those that are trying to centralize Bitcoin. So that's the game. Decide where you sit, understand what it is. And it doesn't really matter what you think about Michael Saylor. It's just what you do and where you sit and where you're going to understand what it is. That's the incentives.
Beautiful. I love it. Gentlemen, this has been absolutely fantastic. I think we'll have to try and get you guys together again. I'm curious to see what happens after that August 17th. And just even quickly, the idea of being in the sovereign game in the battle, I feel like we have like a team captain from Team Cold and a team captain from Team Bitcoin working together on that whole greater sovereign thesis. So I love it. So Doomberg, starting with you, where can everybody go to check out your work? And tell us a little bit more about the book that's coming up.
Yeah, Doomberg.com for everything. The book is still in the early phases. We just, the ink is still wet on the contract, but very excited about it. Great publisher, great agent, great concept, wildly different challenge. Now I've written and we've published, edited, published, defended 500 essays, but writing a 60, 70,000 word manuscript is an entirely different beast. Hopefully we're up to it. As it nears publication and I have to do my little dance, be happy to come on and promote it. Because we're not writing it for nobody to read it. Come read my boring book is not a great pitch.
Not the best one. We'll have you back on and make a good one.
But Doomberg.com for everything. We ejected a squatter a couple of years ago. That was a wonderful investment, a pricey one, but makes it easy for everybody listening to find out more. We are capitalists, and so we live and die by our subscribers. We have no corporate sponsorships or branding, which I think gives us some editorial freedom. Back to the conversation about media at the beginning. So anyway, always appreciate the conversation. Nathan, Simon, interesting point of view. I learned a lot, and thanks for having me on, guys.
You're very welcome. Simon, tell us about your upcoming book and where can everybody go to find you?
Yeah, so I'm mainly on X at Simon Dixon 21, but I've been taking a break to write the book. And I got a YouTube channel, Simon Dixon 21. And in terms of the book, I'm on chapter 20 of 21, and I've been trying to write it for 6 years, but I decided to just go completely cold and get it written. So it is going to happen this time. This is my fourth promise. Yeah, so the book is called Game of Money. There's 3 parts. The first is understanding the game. The second part is understanding the rules. And the third part is winning the game. And the subtitle is From Subordinate to Sovereign. And that's at the country level, the business level, and the individual level.